Assalamualaikum and good afternoon, everyone. Welcome to today's webinar. Inshallah, give us maybe another 2 minutes while we let more attendees to join us. Inshallah. Thank you. All right. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. As-salatu wassalam ala Rasulillahi sallallahu alayhi wa sallam. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome, ladies and gentlemen, to the monthly Sharia webinar series entitled Sharia Governance and Risk Mitigation in Islamic Financial Institutions, brought to you by Bank Rakyat, INCEIF University, IIUM, and Darasat for Research and Consulting in Islamic Banking. My name is Aizuddin, and it is indeed a pleasure for me to be your MC, as always, for this webinar. For your information, this is our ninth series or ninth edition of the monthly webinar series, and we will continue until the end of the year, inshallah, and perhaps into next year as well. Now, for today's topic, we have a very interesting topic lined up for you today, which is Sharia governance and risk mitigation in Islamic financial institutions, presented by Professor Dr. Zulkarnain Muhammad Sori. He is the Associate Dean here at INCEIF University. Now, for your information, for those of you who are joining us, we will have the presentation by Prof. Zul for about, let's say, 40 or 45 minutes, and then we will open the floor for Q&A. And please do submit your Q&A, your questions in the Q&A window below, and we will have them all answered within the allotted time at the end of the webinar, inshallah. So without any further ado, Prof. Zul, over to you.
Right. Thank you, Aizuddin. Hang on. Why am I? Okay, you can hear me clearly, right?
Yes, loud and clear.
But my face is not that. Okay. All right. Let me share the slide first. All right. Okay. Assalamualaikum warahmatullahi taala wabarakatuh to all participants as well as the organizer. My name is Zulkarnain. I'm currently in my 10th years with INCEIF. I should celebrate it, 10 years already. And I'm currently as the Associate Dean for Academic. So my job looking at the quality of the education at INCEIF. All right, my topic today is on Sharia governance and risk mitigation in Islamic financial institution. My objective today, so at the end of this session, the participants should understand the importance of Sharia governance in maintaining transparency, accountability, and compliance with Islamic principles in the operation of Islamic financial institution. And number two, to describe the fundamental concept of Sharia governance and its key component, including the role of Sharia committee and board of directors in ensuring Sharia compliance in Islamic financial institution. Before I start, I have this, I would say, figures that I would say that the only business that grow from year to year, that sustain over the years, is fraud, stealing people money, try to break in the system, etc., etc. So I try to relate. I wrote a book on corporate governance, but you couldn't see because when I show here, it capture my image, not the book. It is back in 2012. I wrote on corporate governance practices in Malaysia. I'm the editors of that book. So this part of the stories here is written there. If you look back about 2 decades ago, year 2000, okay, we heard about Enron cases where the founder, which is also the officers of the companies, together with the CFO, they collude, they do a lot of negative things, and the company lose a lot of money. If you look at the screen, It is $1 billion, the biggest one, Enron, 74 billion, and employee lost jobs, their retirement money wipe out, the stock value go down to less than 1 ringgit from more than 90 ringgit. So we can see the implication to the people like us, the ordinary people at the street, when the system of control is not there, when someone with power put in their action which is untowards the organization, and it affects us. If you look at the case of WorldCom, the same thing. Okay, Enron and WorldCom is when the management try to show that they are performing well. Among the things that they did was they book in sales, though the sale is not happen. Though the sale, they hear about something or they discuss about the sales that they're going to have, but it is not happened yet. They book it in their accounts. They make it, the number become superficial, the number become big to mislead the public. Okay, if you look at the case of Parmalat, this is the biggest case in Europe. The same thing, the same issues happen. And if you look at one case before, 5 years before all this case, in 1995, Nick Leeson at Barings Bank. This is not a fraud or something that the guy steal money, but Nick Leeson by accident making loss in his trading in Singapore, Barings Bank in Singapore. So by mistake, he made loss and he created an account coded by 888888. Number 8 is Ong to Chinese, right? So this guy working in Singapore, and then he create 68 account, and he posts all the losses into this account with the hope that he will recover in the next transaction. There are sometimes he recovered the losses, but many times he did not recover, and the account grows until the account cannot afford. They cannot afford to have such account, and they declare it, and the bank collapse. Okay, so all these are issues related to system of control, where Nick Leeson don't have intention to steal money, but because of his business operation did not on his side, then he got to do something to hide something. So where is the system of control? At that time, that is too early, 1995. The things happened early than that. And at Enron case in year 2000, nothing at that time. And the result is America passed a bill, what they call a Sarbanes-Oxley Act. So this act is among the tightest act in the world at that time, that control many things. Okay, so there are many implications. If you look at my slides here, I put job losses, means many people lost job. Economic ripple effects means that there is a chain of economic effect. Yep. Anybody try to talk something? Yes. Okay, let me proceed. It is clear, right? My voice.
Yes, yes.
And then
Very clear.
there are issues on compliance, regulatory costs, means that regulator coming in, they need to put in regulation, they need to put in supervision, they have to do many things, and then loss of investor confidence and market volatility. This is the general market situation where the system control is not there. People are afraid to put in money in our capital market, right? Legal settlement costs, auditor, corporate oversight reform. So all this create disaster to the economy, disaster to the investment market, capital market, and to the public itself. And if this thing happened to Islamic finance, this is the answer of ChatGPT to me. I just Google, I just put in, I asked ChatGPT, what will happen if corporate scandal whatsoever happen in Islamic finance fraternity? So ChatGPT answered to me this thing, okay? Direct financial losses, fraud and operational losses means that if we have weak governance, then fraud will happen a lot. There are many fraud, and then operation losses, long-term market and economic implication. Since Islamic finance picking up with double digit around 17% growth, then the effect will be great because the asset now stood at 3 trillion, right? So if we have weak governance, then there will be reputational damage. Why? People cannot trust us, Islamic finance, though the name is so noble, but the public lose trust, regulatory penalties and increased compliance costs, and eventually there are many more. Okay. So my agenda today, that is just opening. My agenda today is I'm going to discuss on introduction a bit, and then I'll go into Sharia governance framework, and then I will talk on line of defenses, expectation on Sharia audit, as well as Sharia review, and then impact on Sharia non-compliant risk, and then the current practices. All right. If we look at Islamic finance industry, okay, we put in name Islamic finance. In Malaysia, I think we are used to the name. Nobody's allergic with the name or Islamophobia. So the name itself, when people look at Islamic bank, any Islamic bank of the 16 as well as other finance institution, the mandate, we will know that the moment we see Islamic bank, we know that the mandate is for the Islamic financial institution to operate within the context of Sharia rules principle. So people know the values of Islamic finance. I talked to many non-Muslim recently because I go for training and many other events. I talk to non-Muslim when they start open the conversation on finance, on banking. I start talking about Islamic finance. They agree that they trust the system. They put in their money in our banking system, Islamic banking. So the mandate is there. So they put trust, means investment account holder, our saving, current or whatever deposit account holders, and those who are deal with Islamic finance, they trust on us. They trust that the conduct and practices within the label or brand of Islam or Sharia. So they have trust on us, and this Islamic branding or Sharia branding will pull the crowd. Means the people, when they trust it, we will have many customer, many people who believe in our system, though they are not the believer. Okay. And if we look at the system of control put in by central bank in Malaysia, what we can see is started back in year 2010. Okay, when Bank Negara come up with corporate governance framework, Sharia governance framework. And then recently, not too recent, about 5 years ago, Bank Negara revised, and Bank Negara come up with Sharia governance 2019. Okay, so what in it in Sharia governance policy document 2019? It is they define it. They put a statement that Sharia governance is integral to Islamic financial system stability. So why they put in stability there? If people lose trust on our Islamic finance system, we will pull out money. Okay, like you always hear that, right? Some transaction people put in social media, they make it as a big issue where they say that this bank, they are without their consent, the money was transferred, they lose money in the system. People will when they lose trust, people will pull out their money, and our banking system, our capital market, and the whole financial system will dry out. Because when the trust is not there, the public, the investor pull out their money. So with this Sharia governance policy document, it is a commitment shown by the central bank, a commitment and expectation on on the Islamic financial institution, Islamic banks, then it will strengthen the public trust, okay, in the integrity, management, business operation of Islamic financial institution. And then the policy document also outlined the Bank Negara Malaysia expectation for effective Sharia governance that are well integrated with business and risk strategy. I will discuss later on what is the difference between the current or the new Sharia governance policy document and the previous Sharia governance framework. And if you look at the policy document, it talks about strengthening, it talks about quality, oversight, accountability, about responsibility, about the decision-making process and the internal control function to promote Sharia compliant risk culture. So the wording, the message by Bank Negara improved as compared to the year 2010. If you look at year 2010, it is the same like if you talk about quality, if you talk about MQA in education, Malaysia Qualification Agency, they put in the system just to define, just to make sure that the system is there. And then after certain years, they revise and then they come up with improvement. This is what happened with Bank Negara Syariah Governance Framework, where in early years, year 2010, they just put in the framework where we have the mechanism, we have the function. At that time, they did not talk about the risk. They did not talk about the integration between function, mechanism. When come to year 2019, the message issued by Bank Negara is more towards improvement. Right. So if we compare, I will do this quickly because we don't have much time. If we compare in the revised Sharia governance policy document 2019, okay, we see that the document introduced strengthened oversight accountability mechanism, and there is integration where Sharia governance integrated with business and risk strategy. So risk management become one of the key important issue in the new policy. As compared to 2010, they did not align the risk with Sharia governance. Okay. And also the new document emphasis on the increased responsibility for overseeing Sharia non-compliant risks and ensure integration with Sharia governance. So the board are given responsibility, and this tie up with the IFSA 2013. If you look at IFSA, they put in high penalty on the board on Sharia compliance issue. Well, if you realize that the IFSA, Islamic Financial Services Act 2013, board of directors, if proven guilty, they will be penalized with 8 years imprisonment or 25 million penalty. If you compare the new document, Sharia Governance Policy document, with the Sharia Governance Framework 2010, the Sharia Governance Framework 2010 only assigned the responsibility to the board. Okay, they did not put emphasis on the responsibility on non-compliance risk. And number 3, the Sharia Committee independence and accountability also being emphasized by this document, the new document, where the Sharia Committee independence of the board as well as the management are emphasized in this document. And also the policy for conflict resolution. This is very important because the Sharia issue being discussed and being guided by Sharia Committee or Sharia Supervisory Board, but Board of Director is the one is responsible to put in effect. There are many situations where the board agree with the Sharia Committee. there are small issues where the board did not agree with the Sharia committee. It depends on the issue. I don't know whether I have the rights to mention examples here. I think better not for me to raise it here, because I forget where I got the information, the example I involved with board training, board discussion. So I'm afraid I leak some key information. But I will discuss on the Sharia audit, how they work, because I have the opportunity given by ISRA consultancy to lead Sharia audit. So I will share my experience also in this presentation. All right. So if you compare with the old document, it lacked detailed conflict resolution mechanism when the board did not accept the Sharia committee recommendation, and they must have a kind of policy, kind of strategy on conflict resolution. And number four, the difference between the two policy is that the Sharia compliance culture and remuneration. The new policy, Sharia governance policy document, outline on the importance of promoting Sharia compliance culture, and they also put in the remuneration for Sharia governance responsibility, but the old document did not specifically mention about that. And it also outlined on the tenure, where Sharia committee only take office for 9 years, and they put in new criteria where the old document don't have. And then the Sharia committee composition, where and meetings where they should meet at least once every 2 months, but the old document did not mention about it. Right. So what I can see here, the new policy put high expectation on the mechanism in Islamic financial institution to really look into Sharia non-compliant risks. Okay, this is the biggest risk, and other risks. Okay, if you talk about Islamic financial institution, Sharia non-compliant risk become number one. It's supposed to be number one. When we discuss about Islamic finance product and etc., we need to put in non-compliant risk as number one. And this is how the mitigation should be done. All these functions need to really play their role and make sure that the system of control really works. If you look at the structure, this is the old structure. The document, Sharia Governance Framework 2010, clearly outlined the functions and the mechanism. Board of Directors at the top there. If you look, the triangle at the top is Sharia compliance, or Sharia as an overarching principle. And then the second line is the Board of Directors with its committee. You have Board of Risk Management, Board of Audit Committee, and then Sharia Committee, half box lower. This is the old document. And I keep asking why the Sharia Committee half box lower. And throughout time, I got the answer where Sharia Committee is not the same as the board. Sharia Committee did not make decisions. Sharia Committee provide recommendation to the board. And management, they report to the board, and we have the 4 functions. The new structure, they did not explicitly mention about Sharia research function, which is the third box from left. We have the old policy, the third box from left. We have Sharia research function, and it is not outright or specifically mentioned by the new policy. More or less, they are the same structure, but there are some differences in terms of emphasis by the policy. Right. If you look at the Sharia risk management function here, as everybody know that they are looking at risk, but you will be surprised if you go to the market that some financial institution, they integrate it at the risk management. But when you look at the document, they did not specifically mention about risk management, though Sharia risk management is the key thing in Islamic financial institution. You read their prospectus, you read their documents, it is not stated about Sharia risk. So as an auditor, I remind them that the message must be clear. You must put your Sharia risk management in your document, so people know that you are taking care, you are put focus on Sharia risk management. And as on the screen, you can see that what is the minimum that they should look into. They should integrate Sharia non-compliant risk with the enterprise-wide risk management, identify Sharia non-compliant risk. So we hope that Sharia risk management will perform their second line of defense duty by putting in all the potential risks that they see that related to Sharia non-compliance risk, and there must be mitigation measures to counter the potential risk. And Sharia audit function, if you look here, their role is more on independent assessment. That's why if you look at Sharia audit, they are reporting, they report to internal audit chief. Their work is in that circle, and then this is their role, where they have to establish audit methodology, to put in audit plan, audit program, and communicate the results. What I find in my communication with, as a researcher, my communication with respondents from various financial institutions, big and small, some of the institutions still not clear what is the difference between Sharia audit and internal audit. So what is, that is the general one. What is the different, the work performed by Sharia audit and the work performed by internal audit? There are many Sharia auditors say that they are clear, but we need to check ourselves from time to time to make sure that we deliver what we are entrusted to. Okay, so here it is clear that audit methodology, but the weakness of our profession is that there is no clear standard, or there is no standard on Sharia audit at the ground. If you look at external audit, they have very thick book on auditing standard. Internal audit, they have their society, which is very strong. They come up from time to time on the internal audit related issues. They have their own standard. How about Sharia audit? Do we have Sharia audit standard? Do we have Sharia audit guideline? Do we have Sharia audit code that guide us in our work? So that is the thing that we need to look into, and perhaps I heard there are parties looking at it. So hopefully we can have it in the future. And then Sharia review function, another important function. Sharia review look into regular assessment. This is different than Sharia audit. Sharia audit, independent assessment. Their work is normally after we close the account and they start doing it. It is an annual business. But for Sharia review, it is a regular assessment. So their role is, among others, is to identify, assess, monitor the compliance, and they report to the board. They inform and provide updates, and make sure that there is adequate training and guidance provided to the officer of Islamic financial institution. All right. And if we look at the ground, at the practices by Islamic financial institution or by banking industry, by any other industry, the governance, the way we structure our organization, we have first line of defense, we have second line of defense, we have third line of defense. I always communicate with my student at university, where they difficult to understand what is the first, second line of defense, or what is internal control. I always relate, I put analogy, it's just like your body. If you look at your body, you have parts in your body that secrete insulin. When your insulin did not enough, then you will have diabetes. So the system haywire, internal control system is not there. When some people, the patient that have HIV, then a simple disease or simple sickness like cold, flu will be a serious problem to them. So if you look at banks, this is how they structure, because under our skin we have antibody, and there are separate part in our body that perform different role, like our kidney perform different role. The same thing at banks, where they have first line of defense, which is the management do that. Second line of defense, we have Sharia review and risk management perform the second line of defense. And the third line of defense, the same like our body, esophagus secrete insulin. So banks or in financial institution, they have third line of defense, which is Sharia audit. So their role, as I put on the screen here, the first line of defense is the management, the one the involved with the operation. They put in the control. They know that they cannot open the bank at after subuh, after fajar. They have to open the bank at 10. Then their security and whatever control they have to put in, they think about it. They put the policy there. They perform the first line of defense. If someone come to the counter, need to withdraw a big amount of money, then the manager at the back need to put approval or to put in some password. That is first line of defense. And then the second line of defense, like Sharia review, they perform the end-to-end product pre-development process, end-to-end product post-development process, branch and business unit review, non-product related, etc., etc. They do a lot of things. And then the third line of defense, the Sharia audit, do compliance audit, financial statement audit. This is based on the old document. I put in their expected roles there, compliance audit and etc. So the first line of defense put in internal control system. The second line of defense should come out with what is the risk, if risk management, and they also look at the first line of defense. The third line of defense look at the second and the first line of defense. So that is the academic part, the theoretical part of the system of control, internal control. And I have the privilege to do Sharia audit with my short experience as an auditor at early stage of my career, and as finance manager before I joined academia. Islam Consultancy agree with me that I should lead the team. So I collect this experience and I share with my participants here, as well as the other avenue, where in my audit exercise, okay, one of the institution, I cannot name it because this is very what I can say, PNC, right? But for the sake of education, for the sake of sharing knowledge, then I put it here, and then I blank the related information. So Sharia auditor find out that the commodity details, or what I'm doing here, I'm checking a suku issuance where they have underlying asset, okay? So the commodity details provided in commodity murabaha transaction document are inadequate. We Sharia auditors said that your document is not enough. The Sharia audit team observed that only commodity names were provided, but the other key information such as chemical, physical, and other qualitative features of the commodity were not provided. Means that the certificate or the document that we examine, it only gives general information. Okay, what general? In fact, the commodity may have different qualitative features or grades. For example, RBD palm oil. Okay, the document mentioned RBD palm oil. To ordinary man, to me, which is first time I see RBD palm oil, I said, okay, you have underlying asset, no problem. What is the issue? But my team is very smart. Okay, my team, I have Sharia people, I have accounting people. We start looking at it. They raised the flag. They said that let's find information. What is RBD palm oil? Oh, RBD palm oil is cooking oil. You go to your kitchen. What cooking oil do you have? At my kitchen, at least 3 cooking oil. I got first cooking oil is the palm oil, which is very brownish color. My kitchen got also the sunflower oil, very yellowish color. And I also have the other oil. I not remember what is the name, a bit reddish color. Okay, so when you said RBD palm oil, it refer to cooking oil. It is a very general term. It is not detailed. Okay, and on scientific perspective, there are many type of cooking oil. You have CP6, CP8, CP10, and so on. So straight away come to my mind, if this issue brought to the court, the judge got problem. Why? The judge said you want to deliver which cooking oil. There are many cooking oil. If you said RBD palm oil, I don't know which one I'm going to decide. So this is gharar issue. So the absence of adequate details raising concern on existence of gharar in the transaction. The concern is particularly important considering that the commodity vendor are from various parts of the world. If you source your palm oil from Burma, Burma may say that our normal practice is CP6. I just put in example. If you source from China, China said, no, we work on CP9. Since your document not mention our practices is CP9. Ghana said, no, we are different. Indonesia, Turkey. So you are in a very deep dilemma situation, right? So if you look at BNM Tawaruk PD document, paragraph 13.6, this policy, Sharia standard, state clearly that in the event where the asset is not present at the Majlis al-Aqad, the contract session, the seller shall provide purchaser with a specific description of the asset. So paragraph 17.3 state that asset specification shall be mutually agreed by the contracting parties. So this is one of the incidents that we found in our exercise. And as researcher, I'm start thinking that what Sharia auditor should do when they go to the ground. Because if Sharia auditor just repeat internal auditor, better we don't have Sharia audit. We just open the job for internal audit. Because Sharia auditor, the expectation, people look at Sharia auditor, the expectation is very high. We hope that Sharia auditor to protect our interests. We hope that the transaction, the business transaction is Sharia compliance. So I try to link to the pillars. Yes, this is the answer. This is the thing that we should look into. Where under sale-based transaction, this is sale-based transaction, murabaha. You have 4 pillars where contracting parties, akad, underlying asset, and concession become the pillars of the transaction. The absence of any one of these will affect the Sharia compliance of the contract. Okay, so we need to look into this, and then we check with our Sharia audit practices. And I have second example, but my time now is already 1:41, so I need to cut short this one. We find out that the commodity mentioned in the document did not give details, missing full address, etc., etc. So if you as an auditor, this has happened to us, we try to locate the address that given to us, and we find out there is no structure at the address. So what is your perception on the transaction? So the absence of detail raised concern regarding identifiability of the commodity and existence of gharar in the transaction. The concern is particularly important if there are multi-countries, multi-geography, which is we don't know at the country. We've never been to such places, right? I've been in Burma, I've been in China, so I know these places a little bit, but China is so big country, so I don't know if they put in somewhere at the north. Well, where is the location? Right. So as an auditor, Sharia auditor, this is the issues that we need to address carefully. We need to look into it, and then we as the agent to mitigate risk, right? So this is the potential implication, like regulation, restitution, loss of recourse, write down, direct purification, invalidation. I just pick up one. Maybe we are not used to like The rest is quite easy, like loss of recourse. We may have transaction that have recourse in our product. Okay, financing whatever with recourse. Recourse means that if someone sells something to us with certain condition, let's say sell their customer. Okay, a bank sell their customer to an institution, and then that institution will do the rest, but with condition that the customer that we sell to that institution, they are all category A, good credit. If someone in that category default, then they can return the customer. That is the cost. Where if one of the customer default their financing, so the buying side will send back the customer and we will replace. That is kind of recourse. But if you have issue in terms of Sharia non-compliance, then you might not be able to do the recourse. All right, that's all for now because the time already 1:44, close to 1:45. I pass back to Din. Maybe you can start the Q&A.
Okay, excellent. Thank you very much, Prof. Zul, for that very thorough and good presentation, alhamdulillah. Now, I would like to open the floor for any questions for our participants. Do submit your questions in the Q&A window, and then we will address them, inshallah. But perhaps if there's any questions from our panelists. Perhaps if we don't have any questions, maybe I can
just one question, maybe,
yes, sure.
Prof.
Yeah.
Yes, Dr. Tuan Badrul.
Warahmatullah.
Just Dr. Tuan Badrul.
Yes, Prof. How are you?
Oh, from what, UAE?
Just want to get your insight, Prof, because I think one of the maybe a little, a small debate or discussion, I would rather say, pertaining to the function of Sharia advisory. You see, because it is clear actually for Sharia review and Sharia risk is they fall under the second line of defense, and Sharia audit falls under the third line of defense. But for Sharia advisory and research, for that matter, so in your opinion, Prof, it falls under the second line defense, just like review and risk, or it should fall under the first line of defense. Since they are working side by side with the business unit, so they are in terms of their function, it seems like they are in the first line of defense. But from the other hand, on the other hand, they are assuming their role as a control, right? So should they be in the first line of defense or second line of defense, Prof? Thank you.
Okay, I would say, this is my personal opinion. I would say they should be on the second line of defense. Why? They will communicate with various departments to get information, to get opinion, to seek advice. So they will in touch with many departments, and they are not the one who doing the business directly per se. So we should not classify them as the first line of defense, but they should do the second line of defense. But why not the third line of defense? The third line of defense is normally deal directly to the audit committee, directly to the board, which is separation from the executive power. Advisory normally advise various point like Sharia committee and the rest. So they should be on the second line of defense because of their communication, their work related, and they are subjected to check and balance by the third line of defense. So I would suggest second line of defense.
Okay, thank you, Prof.
Thank you, Dr. Tuan Badrul. Any questions from our viewers? Perhaps if you raise your hand, I will also allow you to unmute. Perhaps, Prof, if I can ask as well, what do you think are when it comes to financial, Islamic finance regulators, or regulators in general, what are the steps what steps can they take to better support the growth of Islamic finance while ensuring the risk mitigation?
Right. As I mentioned earlier at the beginning, that Islamic finance, with the brand, with the labels, people put their expectation, people put their perception, and those who deal with Islamic bank, they put their trust on Islamic banks. So the trust is there. People do business, and you want to bring it up to another level to make it more people put in money in your banks. First, we need to make sure that they really trust us, because when you talk about bank, there are so many banks. You have conventional, you have Islamic, there are so many, 16 banks. So you must be proven that you are reliable, you have the trust. And nowadays, trust, reliable, it cannot be, oh, they will know later on when we do it. Nowadays, people, quote unquote, self-praise themselves. They have to tell the people that they are doing good, they are doing this and that. So reporting non-compliant doesn't mean negative. Okay, my team now doing a research to advise the policymaker on Sharia non-compliance reporting, non-compliant risk reporting. So when you report thoroughly about non-compliance, it doesn't mean that it is bad. It's in the other side of the coin, it signal to the public that this guy I can trust, because he review himself and report himself about what is not and not comply, and what is the mitigation measures or future measures to be done to make sure it is not repeat. So by doing that, people will see, this guy is not politician. Politician say something, do something else. But this guy really tell about their mistake, how they're going to do that. So it is a way of communicating your business. But telling thousands of non-compliant are not so good, right? You have to make sure that it is real, and then not many, your system is doing well. Then, so how the regulator should encourage, should grow the business. To me, regulator cannot do many things on the operation side. Why? They are not doing the business. They are more towards to regulate. Their name also regulate. But when they put the regulation must be practical, the regulation must be comprehensive, the regulation must be able to address the issue that everybody face, and the issue that everybody did not think, but they think one step forward, like issues, cryptocurrency, like issues, cross-border issues, and many others. So the regulatory bodies need to look into this, like the issue of Sharia auditor. They don't have guide. They don't have Sharia standard, Sharia audit standard. So this is high time for the regulator to come in and then put together all the parties, okay, come, who are good in governance, who are good in operation, who are good in accounting and many other functions, sit together and devise Sharia standard, Sharia audit standard. At least come up with the first draft and then release to the public in a very general manner what you should do. And then we improve throughout time. So this is how the regulators should play a role. And I suppose I think they are doing that. And I hope they are doing that. If not, then let's do it. Because if you are newcomers, you come into the Sharia audit department, you don't know what to do if you don't have any guideline, any standards, right? So I think regulator can play from the regulatory perspective by putting in more clarity into whatever we have in terms of Sharia governance. So from there, it can grow the business.
Right. Okay, thank you. You mentioned cryptocurrency just now. So when it comes to new technology or emerging trends, how do you see the role of technology like AI or blockchain impact Sharia governance and risk mitigation? Is there a possibility that we see an AI overlooking Sharia, the governance of a particular bank or institution? Or how do you see the role of technology moving forward?
Okay, you have many things. You said so many things there. You have AI, one group. You have crypto, another group. You have fintech.
I mean, in other words, will AI cause us lose our job?
Yeah, that's
All
one
right,
more.
good. When there are threat or risk, there will be opportunity. Don't worry,
That's a good
Tuan
point.
Bat, Dr. Tuan Bat, sebab you will not lose your job. Okay, first, I got another team that we already got early notification. We don't have agreement yet on the research fund by the Ministry of Finance. Okay, Ministry of Finance give 20 million to MIFC and INCEIF, right? So my first research on Sharia non-compliant risk, that is one. We got early notification. We are yet to receive agreement. And second is on the Sharia non-compliant risk. On the blockchain. Okay, blockchain. So you mentioned about blockchain. Yes, the technology is there, but you need to look at the provider, whether the provider is competent or not. But the one that I work with is someone from Indonesia and Singapore. The headquarter is in Singapore. So from the governance wise, I'm coming in. We are looking at the how blockchain technology or smart contract can ensure that the governance, the system of control will intact and cannot be tampered, and will take care the interests of the business and various parties. And as a start, we're going to do it at Lembaga Zakat of one state. We will announce later, of a state, because Malaysia regulation, each state have different ruler. They are the one who responsible. There might be differences, so we focus on one state. So yes, the way I see it, by putting in technology like blockchain or smart contract, it will help internal control. How? It will control in terms of the whether you can change the records. It can control the accessibility of the information. Now, if you look at recently reported by media by a bank in Kuala Kangsar, if I'm not mistaken, and another bank in Kuala Lumpur, if I'm mistaken, where customer fixed deposit being withdrawn by bank officer, and then etc. You can read from the media. So how that happened? Means someone with authority tampered or intrude the system and do the transaction and steal the money. But through the technology that I'm working with my partners in Singapore and Indonesia, we have the theory here, theories quote unquote, we're going to put in the system later on, and we're going to report it, where people cannot break in the system and steal that kind of money. So I can answer your question just now. When come to the technology, yes, there are technology that can help institution to protect their interest, to make sure that the interest of various party, depositor, banks will be protected. That is first. Second, when talk about cryptocurrency is they claim as a currency. But in Malaysia, we have a few regulation, DAE, Digital Asset Exchange, but the trading of crypto, the transaction of crypto is still not accept at the people at the street.
Yes.
My direct experience is that recently I just back from Russia. In St. Petersburg, I walked in the grocery in front of my hotel. Okay. And then when I opened the door, the first thing I saw was the ATM crypto ATM. So you can exchange your crypto with Russian ruble. Okay, local said Russian ruble. So you can change your crypto. So that is what we say currency. You can easy to do that. And when we talk about accounting, I write a paper. You can refer to iGEM by UPM, Scopus Index. It is still far away for market like Malaysia and others to accept it as a currency for exchange. So I would say it is out of topic if we want to discuss about crypto and internal control. It is still we can't relate it. Why? The recognition is still not there. Accounting standard, you cannot classify crypto into what? You want to say crypto is a currency. It failed the definition of IFRS 9 on financial instrument. Financial instrument is a contractual relationship between parties, but crypto, there is no contractual relationship. So we just find that coincident intangible asset fit in crypto definition, or crypto fit in the intangible asset, and also commodity. So that is number 2, and your number 3 is crypto, fintech, and the other one is what? You also forget.
Crypto, fintech, blockchain.
Blockchain is under fintech just now.
Okay.
Or the system. All right. I think that is to answer you. The development in is finance or Islamic finance. We have to select that whatever that can help us. We need to do maybe thorough research, and maybe in the future we can apply it.
Okay, excellent. Thank you very much, Prof. Zul, and our panelist, Dr. Tuan, for the Q&A session. I guess we've come to the end of our webinar today. Once again, on behalf of the organizers, I would like to wish thank you to Prof. Zul for presenting about our topic on Sharia governance and risk mitigation in Islamic financial institutions. So, ladies and gentlemen, I guess it's come to the end, but we will return with the next Sharia webinar series on the 21st of November, inshallah, with another webinar presented by Sheikh Ismail Oglu. That session will be in Arabic, inshallah, on the 21st of November. So with that, I end my duty with wabillahi tawfiq wal hidayah. Wassalamu alaikum wa rahmatullahi wa barakatuh. See you in the next webinar, inshallah. Thank you.